Are there safe investments for your money as inflation, interest rates, and recession fears take a toll? Let's continue with all our experts. And in fact, Robert, I'm going to go to you for the first one. Can you define a traditional bear market and tell us whether we're in a typical one right now?
Yeah, well, a typical bear market has a peak to fall trough of above 20%, so we're kind of comfortably in that. I think what makes the bear market today quite different from previous experiences is we have weak growth, of course, but we also have high inflation. So that means it's very painful for equity investors and for bond investors, right? There's no kind of safe haven. Rising interest rates is hurtful for bonds, falling growth is hurtful for equities. So that's one key difference about this bear market from the past. And I guess the other thing that's also different is that there are pockets of opportunity. So we can see year to date already the panel's been quite positive on Asia. Asian equity markets have actually been outperforming year to date developed markets and the US market. So I think bear markets are always subtly different, but they are painful. But I guess what makes this one worse is there's just a lack of safe havens for investors.
Speaking of which, Sani, we always know that diversifying is key. Would you recommend bonds when it's the doldrums like this?
Well, if you look at the bond market, the first 6 months this year itself has been the worst performance in terms of the bond market for the past 40 years. On average, bond prices are down by about 10% across the board based on some aggregate indices. Given that, if you were to ask me whether the bond market or the equity markets are nearer to the bottom, I think the bond markets are nearer to the bottom. However, going into the bond market itself, as alluded to earlier, you need to look for quality, because if we are going to a recession, then one would expect basically default rates to rise. And we've seen that in 2000, 2008. So things like high yield bonds, you see default rates doubling, tripling even, in fact. So I think you have to be very selective, even though the bond market is probably much more safer now than the equity market.
Okay. Hou Wey Fook, I mean, you gave us a little bit of a teaser just now as to the direction that investors should go to. What alternative assets can they consider as well?
Yeah, so again, back to the portfolio construction process. First, you want to buy into what we call income generators, which is bonds in particular. You want to buy into growth enhancers, which would be growth stocks. And then you've got this space called alternatives. And I think they play the role as a risk diversifier. It would kind of help the entire portfolio to be resilient. And one of the best risk diversifier would be gold. So gold is not correlated to equities and bonds, and having some exposure to gold would really help the entire portfolio to be resilient against these volatile times.
Stefanie, let's talk currency now. And the strong US dollar has had a tremendous impact on emerging market currencies, even oil markets.
Yeah.
Have we seen a peak for the US dollar, in your opinion?
The US dollar, by the way, should also be considered the safe haven asset right now. We have seen it very well trading with this type of characteristic. And it's quite interesting whether that is the geopolitics or that is recession risk, the US dollar, and recession risk in the US actually, the US dollar is still very well supported. Where I see the dollar, and the dollar in FX, you always have two sides to every equation. The US dollar versus the euro, which is the currency pair most people typically talk about, most probably has seen a floor now. That's not because the US dollar doesn't display any of these qualities anymore. It's because Europe has come out with these news recently, the ECB, that they are working on an anti-fragmentation tool to make sure periphery spreads are controlled better, and enables them, of course, to be much more aggressive in their rate hiking cycle. So in that respect, the euro dollar most probably has a floor to it, but I would say the US dollar in its characteristic will still remain supported.
Robert, let's talk about crypto as an alternative asset, perhaps. We must bear in mind there's been a nearly $2 trillion US dollar crash in the market.
Correct.
So how should investors be looking at this particular alternative asset?
Yeah. I mean, I think that it's obviously you have to have a risk appetite for that type of investment. It's not really something I would say that mainstream finance is really recommending just because of the volatility. I mean, you make the point, it's fallen 70% from its peak. That's a very painful correction. And I guess in this environment, it's another asset that's not really working as a safe haven. So we heard about gold. A lot of people have talked about crypto as being the new gold, but I guess the way things have panned out, it kind of doesn't look like that, in the sense that, you know, gold has been performing relatively better this year in terms of giving protection against the high inflation. I guess the other assets that people could think about beyond crypto is things like real estate. That tends to do better when you have higher inflation, and it's probably something that retail investors will feel more comfortable with because they will understand it better.
All right, Sani, your take on cryptos, is there a glimmer of hope that it could be still the new gold?
Well, I think the market's beginning to realize now that crypto isn't what we thought it would be. It's something which is different from the current market. You can hedge against the market volatility. It's really one of the riskiest of the risky assets. It's if you look behind what cryptocurrencies are, they are basically projects behind it. Some projects have utility, some projects have zero utility. The projects that have utilities, sometimes they have good things coming out of it. I think DBS itself issued a digital bond not too long ago. The European Investment Bank issued a digital bond not too long ago under the Ethereum network. So there are really some cryptos which have utilities behind them. So I think very much like in the year 2000 when we had that dot-com crash. So there are some Amazons and there are some Microsofts within that space which I think will last. But I think by and large all the others, I think you have to be very careful.